if you're thinking about becoming a mortgage broker, you're probably thinking, how much money do they actually earn? And that's what I'm going to unpack in today's video. Also, you want to stick around to the end because I'm going to share the biggest mistake I see mortgage brokers make when it comes to their actually like trying to get their earning potential. This is a huge mistake they make, so you definitely want to check that one out. So the first thing to talk about is kind of the industry standard of what people earn as a mortgage advisor. Now, for me, let's get to the whiteboard for this. So I think if you think about the industry standard for employed first, so let's do employed first. So if we were doing employed, I would say that an employed broker is normally earning, I see, around 40 to kind of 60K. That seems to be the employed kind of standard that we see. Now, remember with this one, the income I'm talking about here, this is income that is once you've kind of up and running. Okay, so that's about 40 to 60K, and that would be made up of basic salary plus some form of commissions and maybe even bonus structures. And you usually find with that on an employed role that the salary would be, the basic salary is going to be anywhere from around 18 to up to about 25 is going to be that kind of basic. That'll be the basic, but let me write that correctly. So that would be your basic, roughly, is about 18 to 25K, and the rest would be made up with commissions, usually maybe some car allowances. And this is going to differ depending on whether you're at a corporate company, whether you're at an independent, whatever it may be. That is the kind of industry standard-ish for an employed role. Now, for a self-employed role, so if we do self-employed, then I would say that self-employed is a little bit different. In fact, it's very different. When you first come out into the industry, it's going to be nothing, big fat zero. You're going to make absolutely nothing. And the reason being is because obviously when you're self-employed, you're going to be reliant on leads. You're going to be reliant on industry, on people providing you business. And you don't get paid until the mortgage is completed, which could take up to 6 months, maybe even longer in some cases. 3 to 6 months is the average runtime. So you're not going to make a lot of money straight out of the gate, which is to be expected, just so you know. And so because of that, that's something to keep in mind. But once you're up and running, realistically, let's rub out that old zero there, being more dramatic. Once you're up and running, I see that most industry standards, they're going to be about 60 to maybe 100K is kind of where many good advisors is where that industry standard gets, okay, for that. Now, obviously, the good thing about that is that's yours. You're self-employed. It belongs to you. That's your income. But that's really where it sits in the kind of industry standard. But what we really want to talk about, is my opinion, is what with like best practices. How much do you actually earn as a mortgage broker with best practices, the best possible opportunities? And when we talk about like self-employed, employed, we'll talk about that now, because I'm lucky enough as a business coach to work with advisors and push them to their limits. And I've also worked in top performing teams as an employed advisor and seen what's possible there too. So let's talk about the best practices in this one. Now for employed, truthfully, for the employed one, again, what I would say for employed is at a real push, you're going to be hitting that 100K mark. And, but I would struggle for it to go above that. Now that's going to be, like, you're a real big writer. If you're doing 100K as an employed mortgage advisor, you will have done a lot. You're doing a lot of business at that point for most of these places. Don't get me wrong, you might have independent firms that are going to give you better splits and things like that can happen, especially if you're experienced. But if you're watching this channel, you won't be experienced. You're new. And so 100K, is that a realistic amount of money to make as an employed advisor? It's not unrealistic. It's not impossible, but it's very hard. But the best practices, you can get there if you're really, really good. You'd most likely though be moving into a self-employed role if you were doing that yourself. But 100K is about the maximum, give or take. If you're in London and things like that, that would probably change that, and it could be more achievable in London, or it could go higher in London. But realistically, employed is that. Now for self-employed, this one is completely different. So I've seen with my type of clients, we have a range of this. Ideally, you're going to be coming in around a minimum around 150. I see these common figures. So let me share them. 150, 180, 200, and 250. They seem to be, depending on the person's work ethic and input and coaching ability, and also location and clientele they have, this seems to be about right. Now, by the way, I'm basing that on like a solo one-man band advisor, maybe an administrative help, but that's kind of where they sit. I've got many advisors on my books who do that. That's not, you'll hear people in the industry, people watch this and they'll go, nah, that's not true. Whatever. It's very true. It's very, very true. I've got many clients who are doing 20 grand months consistently every single month, and that's going to bring you in, just under that 250 mark. It's not unheard of at all. And so it's very doable if you have a right structure and process. But that's kind of where those ballparks are. That's best practices. Now you also have, if you're thinking about taking a firm, if you were to build your firm, that would go much, much bigger. There would be a lot more with that. You'd make more money. And then that, that you could be thinking that could be going 500, 600, 1 mil. In some cases, I have a few clients who are that, but realistically, that 1 mil would be very, very hard to do on an earning of a firm. And bear in mind, you'd have to pay staff, so you'd have staff costs on that. So usually, what I find is this one here, the self-employed one, is the best financial option for most advisors if you're trying to get the most out of it. It just always seems to be. It seems to be the best one because you make the most money and keep the most money. You keep it small, you keep it all kind of concept. So then what is the biggest mistake I see people make with this? Well, the biggest mistake is quite put that pen down, quite straightforward. It is that they think they're going to make money straight away. You think you're going to earn money straight away. It's not going to happen. Mortgages is a long-term, high-earning career, but it takes a long time to get it off the ground. And your first 6 months is going to be brutal, whether you're employed or self-employed, and your first year to 2 years is not going to be a true representation of where you're actually going to be if you put in the work. A lot of these figures of that kind of 150 to 250, and those firms and stuff, you're looking at 3, 4, 5 years to build that level of income of consistent hard work. So if you think you're going to do it very quick, you're not. You're going to make not much money for a lot of hours for a very long period of time. Now, what I'd recommend if you really want to know more about how mortgage brokers are paid, the commission structures, everything, I've got a deep dive video where I break that down in a lot more depth. It's my deep dive content on exactly how mortgage brokers make money. I'll put it up on screen now so you can give it a click, and I'll see you over there. And you can ask me any questions as well, and you want to chuck them in the comments as well.